is still with us on Startup Street. Chennai-based AI and technology startup Mad Street Den has secured Series C funding of $30 million. The company has welcomed a new lead investor in Avatar Growth Capital for this round, which also saw participation from existing VCs Sequoia and Alpha Wave. In an exclusive chat with CNBC-TV18's Jude Sanif, Mad Street Den's co-founder and CEO Ashwini Asokan said she doesn't expect to use these funds to hire or expand aggressively. Here's more from that conversation.
I don't think when everybody was going nuts in 2021, 2022, we didn't go nuts. And when everything is sinking in 2022, 2023, we're not sinking. So I would argue that it's been a story of steady state. Right. You know, companies that are growing in a certain way and building very specific things that the market is really demanding for right now will always find capital. Mm-hmm. I don't think it's a question of, you know, yes, there is a liquidity crunch, there's no doubt about it. Mm-hmm. But there is money for companies that are growing. Mm-hmm. And there is money for early stage. And there is money also for growth stage if you are able to grow in a specific way and cater to the demands of the market. And, you know, there's always money.
Right. So let's break down the funding round. 30 million is what you've got in this round. Avatar Growth Capital has come on as your new lead investor. Yeah. Take me through what the funds will be used for. Sure. Are you foraying into new areas? Where will they be deployed? And what does Avatar really bring to the table? Yeah.
So for the last couple of years, we've basically, you know, trying to expand on our offerings as well as our foray into new verticals like finance, logistics, insurance, pharma, healthcare. And we've always envisioned the company and the platform to be kind of a general purpose, but also, you know, going very deep into very, very large enterprises to solve very specific problems for them, right? These funds specifically are, in a sense, a kind of a milestone of sorts to kind of just double down on what we've already been doing, right? So new markets, new geographies, and just continuing to double down very deeply into these organizations, right? Because we are talking Fortune 500, we're talking Fortune 1000, Fortune 2000 type companies. Those are typically the kind of scale of enterprises that we end up working with. And they don't come to us for just buying like one thing, right? They're coming to us for buying the entire platform and for kind of, you know, adopting AI as part of their DNA. We are an enterprise AI company that is going deep into organizations and helping them transform with AI, right? You've heard digital transformation over the last decade. This is the decade of AI transformation.
You will be hiring now, given the fact that you want to ensure optimum depth going forward?
We don't really need to, is the reality. We're just coming out of a very successful acquisition. We ended up, you know, acquiring a leader in the retail space with reference to excess inventory out of New York just about 3 months ago. And, you know, we are adding people to the company, but very, very carefully, right? Because, again, our value proposition in some ways as a company has been that we've been able to show up as the experts who can help people truly understand what to do with this and how to actually get meaningful, you know, kind of ROI out of this, right? And so it's less about, we will be hiring, we'll continue to hire. We're 275, 300 people today. That's a small number for a company of our size, and we're very proud of that. But we are growing, like I said, we've been hiring globally, right?
Whether so it's in the US. How many are you adding to your headcount of 275 to 300?
Not a whole lot, probably 25 to 50 people, no more. But again, people who have that kind of depth, you know, in terms of being able to deal with this kind of complex AI is probably where we're going to be spending the most amount of money.
I noticed you're treading cautiously as you have been doing so as to, you know, keep a stable ship, and that is certainly a good thing. But I also have to ask you, moving forward on the revenue front, where do you see growth going from here? You know,
it's not a question of being cautious or not cautious. I think at any given point of time, you've got to take your bets, right? You've got to figure out where the risk is and where the risk is not. For us, we've consistently taken bets on what we're building as a company, right? Which means the platform, the product, the core AI, and the IP we have around this is where we've pretty much invested all of our muscle over the last few years, right? Our caution has obviously been in the form of the team or the growth or the scale. Like, we want to be able to do things right and to be able to do things very, very deep, right? And sometimes that just means shutting out the noise in the market and doing what you do best and really playing to your strengths and DNA as a founder. For us, that's really been where our focus has been, right? And over the next couple of years from a revenue, we're growing 100% year over year and north of that even. And so we're just going to continue to double down on.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.